Hi everyone, and welcome to my rant about how the Canadian tax system is designed so the rich get richer. This is my second rant video, the first one being how the poor must stay poor, relating to GameStop and the stock market. I'm not very good at ranting off the top of my head, so I do have a bunch of notes and websites that I'm going to be referring to, and I'll share if you'd like. In my previous video, so I made a video about intro to Canadian taxes, and I stated how the tax rates are progressive. So tax rates increase the more you make, the more you pay. But I'm going to argue in this video how tax rates are progressive up to a point where you make a certain amount, you can hire tax professionals, you can hire tax lawyers. Where tax rates become regressive, you end up paying less as a percentage. And in some cases, many millionaires or billionaires end up paying zero in taxes for years. I'm not going to be talking about how 894 Canadians were involved in the Panama Papers. Even though this is illegal, no charges were laid. I'm talking about hundreds of millions of dollars hidden in offshore accounts, never paying any tax. These are multi-millionaires. I'm not going to be talking about how KPMG and other big four accounting firms continue to help dodge taxes with offshore tax sham. And I'm going to be emphasizing here this one person, 25 million in offshore accounts, offshore tax dodge designed and run by KPMG, and they paid virtually no income tax for more than a decade. I'm not going to be talking about snow washing. I really like this article, how Canada is becoming the newest tax havens where you create an LP and you can pay zero tax on it. I don't know the details, but if you want, you can check out this website. What I'm going to be talking about is our legal rules, like everything designed by the rich, rules made by the rich for the rich, so they pay less tax, and how the poor and middle class subsidize the rich and pretty much pay for the entire Canadian tax system. All the majority of the taxes, percentage-wise, earned by Canada. So what I want to point out, let me just start over here. This is a chart with the different types of income. This is combined federal and Ontario, but it does relate to other provinces as well. I just can't show all 10 provinces and then territories in one screen. So I want to point you to other income. Take a look. Other income, notice how this is the highest. So we have other income, capital gains, dividends. Other income is the highest at every point, every income level. Other income involves interest and employment income. So employment income. 95% of majority, 95% is majority, 95% of people's income. Let's say everyone you see stuck in traffic working a 9 to 5, single parents, immigrants, struggling families, everyone on the bus, everyone taking the TTC, everyone will have other income. This is their employment income. They'll be taxed at the top rate. What do you notice to the right of it? Capital gains. Notice how capital gains at every stage is half of what the taxable income is for other income, which is employment income. So notice this is very good. Look, over 220,000, you pay 26%. That's great. Let's say you're under 50,000. You're paying 12% or 14%. That's great. How many poor or middle class people do you know that have capital gains? How many single moms struggling to put meal on the table have capital gains and they get preferential treatment? How many new immigrants to Canada, like refugees seeking asylum from persecution in their countries? How many of them have capital gains? Little to none. The majority of wealth, the generational wealth that people talk about, passed down generations from family to family. Majority of the rich people's wealth, it's not in salary. It's not in other income. They don't earn a salary. That you don't make tens of millions by earning a salary. It's by assets. And what happens when you sell an asset? You get a capital gain. You can sell millions in assets, you can make millions in capital gains and pay half of what everyone else is paying, preferential treatment. Again, I'm trying to argue that the rates are progressive up to a certain point where you get rich enough, you can hire tax accountants to structure your affairs in a way where you can earn capital gains and you'll end up paying as a percentage much less than your counterparts. Speaking of capital gains, I'm going to show you this next one. This is probably the biggest slap in the face. How many of you have heard of this? Lifetime capital gains exemption. I'm going to say this again. Lifetime capital gains exemption. I'm on the Government of Canada website. What is the capital gains deduction limit? So right now they don't have the updated amount. These are just random numbers. For 2020, 883,000. For 2021, it's 896,000. I'm just gonna round it up to 900,000 just to make my points, just to make the story a little bit easier to understand. When you sell a business, $900,000 of that gain is tax-free. You get a capital gains exemption. I'm going to give you an example. If you sell a business, a qualified business, and you make $400,000, you still have $500,000 in room because this is a lifetime capital gains limit. So you can create another business and you still have $500,000 in room to sell. If you sell a business for $2 million, $900,000 is tax-free. $1.1 million gets taxed at the capital gains rate. So I just wanted to emphasize how insane and how much this bothers me. When you have a capital gain, it's already taxed at a preferential rate. When you sell a business, how it should be, when you sell shares of a company, you get this discounted rate. You're paying at 50%. Let's say over 220,000, you're paying 26.76%. Sounds like a lot, but you are getting a preferential rate compared to what you should be paying if it was salary. So I just want to emphasize, if you have a capital gain, this is why I'm not good at, this is why I didn't want to make YouTube videos. This is how I describe things. You have a capital gain, half of it is tax-free, you get taxed on the other half. But now this rule comes in and says you get to keep that other half as well. How many poor people or middle class or single parents do you know that have 900,000 in capital gains that they get to get tax-free? Why is this rule created? You might say this rule was created so people have an incentive to start a business. Nobody starts a business because they say, I want the lifetime capital gains deduction limit. No one says that. You start your own business because you don't have a boss. The potential income is unlimited. You get the freedom. Let's say if you do sell, if this rule didn't exist, you're still getting a preferential rate. You'll be like, okay, I'll sell the business. I only pay half of what I normally pay. But now the first 900,000 is completely tax-free. Now, tax accountants can help you structure it in a way where, let's say you have a big business, let's say worth 5 million. Your spouse can have shares that they could sell. Your children can have shares that they could sell. Every individual gets 900,000 lifetime capital gains exemption. So it could be way more than 900,000 if you structure it properly. Again, like, I don't understand, if you're making 900,000, this is how the rich get richer. You're making 900,000. I don't want you to get any preferential tax treatment. You're already getting the capital gains exemption, the capital gains 50% tax free. Now you get another 50%. I don't understand how this is people paying their fair share. I don't see how this helps. Trust me, if you take away this rule, you won't hear people saying, oh, now I'm not going to start a business. A lot of people don't know about it in the first place. Again, I think I'm just trying to emphasize tax rates are progressive up to a point where you get rich enough, you can pay tax accountants to structure things in a way where your tax rate goes down. And in this case, your tax rate goes down to 0. Let's move on to dividends. If we take a look at this chart, up to 50,000, don't worry. You see negative rates here, but no one's necessarily making a profit on earning Canadian dividends. But I just want to point out the magic number in Canada is around 50,000. If we go to just their Wealthsimple calculator, I'll use British Columbia as an example. In most provinces in Canada, if you only earn 50,000 in Canadian dividends, you will pay 0 income tax. You will pay 0 tax if that is all your income. Let me just point it out over here. British Columbia, 50,000, that is a magic number. If you earn 50,000 in employment income, you should be paying $10,000. But when you're rich, you can structure things in a way where your tax accountants can structure your affairs in a way where you earn dividends and don't pay yourself a salary. Why would people not want to pay themselves a salary? Let's bring up this chart again. Salary tax the highest. I keep trying to say capital gains. Dividends are taxed amongst the lowest. So under 50,000, dividends are taxed the lowest, but the higher you go, eventually capital gains win out, but not everything can be a capital gain. So you just turn it into a dividend. Now, let me just run through an example. If we go through Quebec, it's a little lower here. So 50,000 in Quebec, you'll still be paying $1,100, which compared to employment income, $12,000. All right. Now let's say you own a business. You're not paying yourself any salary, but you're paying yourself a dividend. You want 100,000 in dividends, or you need 100,000 just to live. 100,000, decent amount. You'll be in the top 10% of income earners. Instead of paying 32,000 in tax, you'll be paying $13,000, which is insane. Your average tax rate is 13%. Instead of, I forgot what it was, instead of 32%. How crazy is that? So let's say you're like, hey, my spouse doesn't work and I still need this 100,000. How can I reduce even further? So instead of paying one spouse 100,000, you pay each spouse 50,000. Take a look at this. Average tax rate goes down to 2.23%. So instead of paying 13,000, you pay each spouse 48,887 after tax, which is just insane. Now, I can take it one step further. If you have kids, you can give them shares. Obviously, if you start a business, the way you structure it, you can give them shares very cheap. There are certain rules where, let's say, they have to be 18 to avoid certain tax rules. But if you have a few kids, you can pay each one up to 50,000 if they don't have any other income, and it'll all be generally tax-free. If you go to British Columbia, 50,000 is the magic number, and it'll be tax-free. Again, how many single parents, how many immigrants, how many new families are struggling families to pay rent, to pay food on the table? How many earn dividends? How many get this preferential rate? None. Majority of people have salary. Majority of people get no tax breaks. I do want to take this. Let me bring this up. Let me just bring up one last point. Professional corporations. So accountants, doctors, lawyers, and now realtors. You can open a professional corporation and you earn income in that corporation and then pay yourself after. Why would people want to do this? If we look at the corporate tax rates, federally, there's a 9% rate. And then whatever province you're in, let's use British Columbia, 2%. So 11% total, you'll be paying that. So 11% is your total tax rate up to 500,000. So why would people want to do this? People use this for tax deferral. When you have a professional corporation, the way this benefits accountants, lawyers, doctors, who else? Realtors. If you make 500,000 a year and you don't need all the income, you can keep it in the corporation at a tax deferred rate. So let me bring this example up. You make 500,000, you pay 0.11 in British Columbia. So you're paying 55,000 in tax. Whereas your tax rate should be, what is it, 52%? You should be paying 260,000 in tax. Now here's what bothers me. Everyone's like, oh, they don't need the income now, so they can defer it. This bothers me a lot because how many salaried people, let's say you make 90,000 in salary, that last 30,000 you don't need. You're like, hey, I don't need it now. I can live off 60. Can I defer this? Can I earn this on a tax deferred basis? If you're salaried, you don't have this option. So I don't care when people with professional corporations say, oh, I don't need the income now. Let me invest it in my corporation at a tax deferred basis. They're getting this benefit for no reason. I don't care if you don't need the income now. You still made the money, pay the tax on it. So this really bothers me. Take a look. So this is current. This is what they should pay. Let me zoom in a little. Okay, so what are the cash savings? They are saving in British Columbia, 205,000 in tax a year. What does this mean for them? If you invest for 1 year in the stock market, let's say at 10%. Average return of the stock market is 10%. So let's go this. They just earned $20,500 on income they shouldn't have had in the first place. So they should have been taxed on this. The government should have earned this money. How many? So if you're salaried, if you're poor, middle class, you don't get this opportunity. You're like, hey, I have 20,000 of extra income. I don't need, can I pay it later at a tax deferred basis? Doesn't work. It doesn't happen. So again, year 2, you make another 205. So this is what? This is 2 years of tax savings. I'm not even going to include the income. Income from investing. Okay. So you have 410,000. Again, you earn another 10%. Let's do this year 3. Let's say you have 615,000 because, hey, I don't need the income. I have 205,000 a year of tax that I should have paid. Now it's just extra sitting in my account. So in just 3 years, worst case scenario, you can have, they have 123,000 extra. So they will pay tax on this when they withdraw it eventually, but they wouldn't have had this, the rich, if they had just paid their tax in the first place. So again, this is available to people with professional corporations. And this rate is only up to 500,000, but above 500,000, the tax rate is still like 0.26. So anything above 500,000, they're still getting a good rate. They can still earn more money than the average person. The people that need it, the people that need the tax breaks aren't getting them. Okay, this bothers me. I'm getting heated. My last point, I'm going to be talking about billionaires. A lot of people might have read articles that Jeff Bezos pays no income tax. Elon Musk doesn't pay any tax. There's also, if I want to make it Canadian, the CEO of Shopify, worth around $8 billion. Let's say he doesn't earn a salary, but he has $8 billion in shares. If he has a capital gain, if he has hold on, 1, 2, 3. Is this 8 billion? So I think this is 8 billion. If he had earned this in salary, like a normal person, okay, not normal person, but you see what I mean. After tax, he should have 3,700,000. 3,700,000,000. This is so weird to read. But since he's earning this in shares, if he sold all at a capital gain, he has $2 billion extra dollars. Again, it's regressive. If you are a billionaire, if you sell $8 billion in capital gains, I'm okay with capital gains being 50%. Let's make it up to 500,000. Let's make it up to $1 million. If you're making over $1 million in capital gains, I want you to be taxed at 53.5%. I don't want you to get any preferential rate, nothing at all. That's my solution. So the poor middle class can get the preferential rate. They're the ones who need the tax breaks. They can bring themselves up. They can bump themselves up. The middle class have a chance to get to upper class, I guess, if that's what you call it. So, and then eventually they'll make over $1 million in capital gains and they'll complain about how they're paying so much tax. But at one point they did get the preferential rate. And then in the end, they had to pay the top rate because now they're considered rich. I think it gets to a certain point where you have to start paying, you have to start charging the rich. One example, I think I kind of went on a tangent. So let's say the CEO of Shopify is worth $8 billion. He doesn't want to sell his shares and he doesn't want to take a salary because you get taxed a lot. So let's go. This is 8 billion. He's okay net worth. He's okay living off of, let's say he wants cash on hand. He wants 100 million. So he has an asset worth 8 billion. What can you do with an asset? You can leverage your assets. Right now he has zero debt on this. So he goes up to a bank. He's like, hey guys, I have $8 billion. Can you give me 100 million? You can use the shares as collateral. This is amazing. The bank's like, hey, we're pretty much guaranteed to get this interest rate, to get this, he's giving us shares of a big company as collateral. Let's charge him 4% in interest. So this guy wants $100 million. He doesn't want the salary. What? So he's paying $4 million in interest, which sounds like a lot. Why would you do this? If he had earned this as a salary, the top tax rate, let's say 0.52, he would have paid $52 million in taxes. So he's earning zero salary. Here's what they should pay. He's earning zero salary. He should be paying $52 million. When you put up your shares as collateral and you just pay interest on it, he can get $100 million tax-free, but he does pay $4 million. And he gets kind of indirectly to pocket, indirectly to pocket $48 million that he should be paying. And then when he does sell this $8 billion, it'll be taxed at a preferential rate. So I think that's it for now. I don't want this to go on too long. I think my camera battery is going to die. I do kind of drag on. Again, I do need my notes in front of me just because stream of consciousness, I'm not very good at it. But I think my next video might be about the poison or the greed that happens when you're rich. I've seen it time and time again. Something happens when you're rich. You're so afraid of losing it all. You can't lose a penny. Like, take a look at these people. They're worth at least 25 million that we found, that the government found, and they pay virtually no income tax for more than a decade. Imagine having 25 million and just holding on to every single penny. It's insane. Because in Canada, you can't really go to jail for tax fraud. You only get slapped a fine. And if there's no jail time, a fine, imagine someone with $8 billion paying a fine. That's fine. They don't really care. So it is kind of frustrating. There is some hypocrisy in what I'm saying because these tax rules, I am taking advantage of the capital gains exemption, the capital gains preferential rate. But this is like a legal loophole. Like, if people were to charge me more, if they got rid of this and I had to pay 53%, like, it is what it is. Like, it is here, so I am taking advantage of it when I do pay my taxes on any gains that I have. But if they were to increase the rate, I'd have to pay it. I'm not going to be dodging in some offshore tax scams. So yeah, there is definitely a poison. Something happens when people get rich. I remember reading a quote from Bill Gates. There's like a billionaires tax of like 1%. His comment was, I don't mind paying extra tax, but at some point I have to start counting how much I have left, which is insane when you're worth over 150 billion. But yeah, and there's also that quote from Leon Cooperman, who says, paying your fair share is bullshit. This is an attack on the wealthy. Imagine being 75 years old and still caring about, the guy must have been worth 2 billion at the time when he said that, at least 2 billion. Imagine being 75 years old and still complaining about paying taxes when, you know, it's just hoarding wealth. It's absolutely insane. Just dropped my pen, but whatever. So thanks for watching this one. Let me know if I was a little unclear, if you want some more rant videos. Again, not a lot of learning, just me complaining. Let me know if you have any questions. Tune in to the next one.